Hi traders, this is TradeAlerter from forexsignals.com coming to you on Monday the 29th of September. Only a couple of days left here in September. It's been quite a hard month to trade. Volatility has gone through the roof, and it's making sort of certain high frequency signals that you'd want to trade be much more dangerous, especially on a few of the pairs which are moving, like the commodity pairs. There've been some quite vicious one-way moves. Unless you're following a trend trading or trend following strategy, you are going to get hurt in such a month. All right, but it is good to every now and again experience a different market moods that can come through. And what we're going to be looking at today is how to try and develop a trade idea inside these sort of moves. All right, so when the US dollar is so strong, you're probably going to be looking at some of the crosses, and that's what I'm doing today. In terms of where the market is, just a brief overview, you're going to be seeing that the US yen has come back under pressure in the last couple of hours. Now it's just hit a new high and it's reversed. Same with the euro hitting the new low and then reversing. All right, so the market's here starting to do a bit of profit taking, and given that it's the ECB and the NFP coming up, it is good timing for this sort of move. The market's been one way for quite some time, so it makes it a bit more dangerous to just start selling into rallies as we normally do. What you may want to do is just wait a day or two, see if the market can get a bigger reversal, and it'll be a much stronger sell. So we're talking 127.50, 128 levels, or if you're looking at something like dollar yen, you may be able to get down underneath 109 tomorrow if the sell-off was continued to 108.80, even 108.50 retest. So this sort of price action you want to wait. The ones I'm more interested in, the ones I've got most of my trades open at the moment, is the commodity currencies. So Kiwi in particular, I've been caught a little bit long here, catching in underneath 80. I got in at 78. So the market's continued lower. But this sort of price action we're seeing today does suggest that we might see a little bounce soon. I mean, the market has to, everyone is short has to take profit at one point. You got to remember that, and no one really wants to be selling this low, not unless you think the market's going 65, as the Prime Minister hinted he wanted the market at today. But the RBNZ has been intervening. That's half the reason the market's just been going one way. This is helping to create that downtrend. Once you create a downtrend, the market can take care of the rest by itself. But you do have to have those oversold conditions shaken out every now and again, and this is pretty extreme. In terms of my trading career, you see this once every 6 months. Every time it comes back. It's just from where maybe there's another flush out all the way to 70. But then from 70 back to 75 or 76. The bigger the extreme move, the bigger the bounce. But given this is intervention on the back of intervention and nothing systemic, then we're probably going to see some sort of rally soon. Probably from the US dollar side, it'll be a broad base, all across all the majors. But how do you want to play it? If the Kiwi's going to bounce, and probably the Aussie's going to bounce. I've been looking at the Aussie. It's been dragged down as well by its own China news, iron ore news, and the Kiwi, and just general US dollar strength. Now he's bounced as well. Now if it was to have a rally here, I do like it against the euro heading into the ECB. So earlier today I saw this sort of price action. Market's starting to lower its orders, a bit aggressive on that pair, on that hour, just here. And so we're looking now at this level and seeing, is it a good level to sell? Well, the market's come off a huge downtrend. It's rallied 700 pips. It's just hit a fib level. So you want this confluence in terms of how far it's gone. So in terms of how far, let's have a look here. Fib level comes in around about 80 from my memory. I have to bring up my other charts to get that exactly. But so far it's been holding. Now if it rolls over here and we get some sort of US dollar strength and the Aussie outperforms the euro because of the ECB talking it down, that's the general plan. All right, so what play did I actually take though? What did I took was Aussie Swiss long. Yeah, so I took this trade. Now, this trade is very similar to the Euro Aussie trade. So you saw this big candle here. Yeah, it means the natural place to put your stop is just below the previous support. Yeah, so it's pretty good risk reward in terms of 40 pips stop loss. And then in terms of how far we can bounce, we're probably going to be targeting back up towards that 83.50 level. That would be a good level for the market to initial target in the next couple of sessions. But this sort of trade as well, if it does put a long-term bottom in, it can actually rally back up. It has been an uptrend for quite some time. It can easily go back up towards 85 in terms of where we're at. Yeah, so a move back up towards here is definitely on the cards as well. The euro is very weak. The Aussie is positionally and just short-term sentiment negative against it, rather than long-term Aussie is going to underperform. It's just not the case. The Eurozone's got major problems. The Aussie's got minor problems. All right, so and there's a carry every day. Yeah, so if you're long Euro Aussie, you're paying it. So we're gaining this carry. The market's pulled back. It's a nice level. Some of the price action suggests to go long, and you can do it in a relatively safe way with a tight stop. All right. Now compare that sort of rather long analysis of what's going on in the market to something like the other trade I've just done, which is just short your dollar CAD trade. Now straight up, the only reason I did this trade, I did it here, is because of these two candles. Yeah, I saw some US dollar weakness on a couple other pairs, and then I saw this sort of candles, and I was like, well, obviously the sellers here are quite strong. You can sell here with your stop just there. That's a 10 pip stop. And if we put in a bit of a top here and we see that US dollar selling ahead of the ECB and NFP, then the pullback potential is worth a lot more than 10 pips. So this is what we call risk reward. Yeah, so we're looking for these high risk reward trades, and you can definitely see a pullback, towards 111, even 110, 50, no problem at all. This market is been one way quite sharply in the last couple of weeks. So that sort of price action is how we trade. Now, after you get that clean out, we have to be looking to get back into the trends on the majors, and that's what we'll be looking at there. In particular, you want to be selling any move here on the Kiwi. The Kiwi is probably going to be the most heavily shorted going forward because of that intervention threat. Market will keep that in the back of its mind on any bounce here, probably towards 78 up to 79.50 is all good selling levels. For move back in terms of where we can get to. I mean, this is previous cluster. We might muck around here again. Range trading, that happens a lot in the Kiwi. Goes into those tight ranges. But given we've got that story of continuation of US dollar strength as they move towards raising rates, I think we can easily see a pullback towards 70 cents over time. And so that's sort of, the next 6 months, or next 3 months anyway, another really big test lower, then maybe we can get some consolidation. All right, so look, guys, we'll be watching the market over the next few days very closely. It's a big week. Always NFP weeks are big. But this particular week, because of the price action the previous week, does give us many more opportunities than usual. All right, so it's going to be a good time to teach, a good time to make some pips, and hopefully do okay. All right, come to forexsignals.com to the live Forex trading room and have a chat with me if you like. You'll find me and the other team traders there. Cheers.